Welcome to Global Markets Radio Daily Preview. I'm your host, Andrew Spanton. Tuesday, oh baby, November 23rd, 2010. This could be one of those days, boy, that we have to remember because a lot going on. A lot. And everything basically is going to be S&P negative and gold negative and dollar positive. We see the S&P futures right here. There's a daily chart. We're going for yesterday's lows. Should we take out the neckline? We said 1170. Oh boy. So we switch over to the hourly. Again, this whole 1172. First, we're going to take this out. This 82 and then say goodbye. But this North Korean situation is serious. China, obviously, is also extremely disturbing in the fact that the banks have basically met their quotas and they will not be lending anymore, I guess. So growth could really slow dramatically in the next month or two, which could, slow getting us into 2011. I mean, obviously we're at the end of 2010, but still, with a month and a week to go, that certainly the markets don't like that, huh? So you look at the hourly chart, does not look very good. S&P's down 13 right now. Hourly chart in gold. Gold could actually hang in there just because of the North Korean situation. Still think gold's going down. I'm a long-term bull on gold, but gold short term, next, 3-4 days, I think it's going to come in nicely. So the commodity currency should continue to take the brunt. Looking at the dollar index hourly chart, again, take a look at my other analysis, my recap, daily recap, and you'll see, as I was saying, 80 is my spot. But I'll tell you what, you measure the move here from 79.40 to 78, and we're definitely looking like 80 and change if you measure the move, right? Flip it, about a penny 40 cents. But this dollar index looks like it's going higher. Euro looks terrible again, as we nailed it. All my shorts with a euro. Oh baby. Dollar yen hourly chart looks like nothing. Tried to break it out, failed, and now rolling back down. The Korean situation certainly could get dollar yen higher as people move out of the yen in fear of possible retaliation. I mean, the Japanese are pissed. Japanese want military action. Obama sucks. Obama's going to destroy any possibility of military action. He's not going to do it. He is a pacifist. He's an appeaser. He is not going to be tough on North Korea. No way. I cannot imagine any U.S. real response. I would love it. Not that I'm a warmonger, but I think that it's disgusting that here we are giving safety, a shield, an umbrella, promising Japan, South Korea, don't worry, don't build up your military, we got your back. And here we're letting the North Koreans not only sink a military vessel, 8 months ago, killing 46 people, but now letting them shell an island that the United Nations has declared is South Korea's, killing people. Can you imagine if that was an American Marine? So, in looking at this dollar yen, it looks like to me like we're probably going to roll over, but maybe this could break dollar yen out. Dollar yen to me is going nowhere. If bond yields continue to go down, which it looks like they're going to come in a little bit more today, and again, we have U.S. numbers coming out, so that's going to be obviously more important to dollar yen. But this Korean situation certainly is going to make dollar yen more volatile, and I think that's why you saw that pop in dollar yen, but once again, coming back down. Sterling hourly chart again, as we said, with euro sterling being so weak. I think the spreads widen out to records in Greece. The IMF threatening not to, IMF threatening them, I'm pretty sure, of not giving more aid unless they get their house in order more for 2011. But in looking at this sterling dollar, oh no, what is that? Well, we're going to have to hear that in the background. The hourly chart again, cable is going to be the relative strength winner. Again, with euro sterling melting down pretty much right now. Oh, baby. And again, remember, when are you people going to try my product? Look at that euro sterling. Say bye-bye. We covered team. You should have been covering some at 85. Next stop, remember, 84.50 is huge. We take out this 84.50. Oh, my goodness, sail at 83. And again, this Contagion, this European situation is not getting any better for the Eurozone. And bond spreads continue to widen out. So, dollar Swiss, obviously Swiss franc benefiting from a flight to safety. I still like dollar Swiss. This 98.50 level is big. It's only 25 pips. Put your stop right in there, 98.40. And I think if dollar can really strengthen, I mean, there's a little bit of a cup with handle here. A little bit with a cup with handle. Damn. But this is amazing. Truly amazing. May you live in interesting times. All the numbers coming out of Europe are pretty much good. Doesn't make a difference. German manufacturing and services PMI blowing the doors off. Wow. Canadian CPI much higher than expected. Look at that dollar Canada. And 0.4, by the way, in Canada. That's a very high number. I don't think the Bank of Canada is going to like that. Hourly chart, Aussie dollar, not looking very good. Rolling over, breaking down. And again, this whole Korean situation is not good. That's going to be affecting that, as well as the China story is going to affect a little bit more. The fact that China's done. Again, even though we're pretty much close to the end of the year. So remember, Pal Talk. You can, I open up my room, Global Markets Radio and Pal Talk. It's free. I jump in there. You can hear me once in a while. 8 in the morning, I let you listen in to my premium room. You can't see anything, but I'll let you listen. Aussie dollar looking like it's going to retest 97.50 faux show. With the S&Ps this week, absolutely. Dollar Canada, well, obviously it's going to be a mixed bag. Obviously, dollar Canada coming down in the last hour on this CPI number, but with metals down, S&Ps down, dollar up, this baby's going up at least maybe to 102.50. Easy. But I'll tell you what, I like that Euro Canada a lot better. Oh, baby. Team, you better be short that. New Zealand, hourly chart, once again, coming under pressure. Looks like we're easily going to take this out. We take out 76.40. We could easily be talking about 75. Measure the move also. That's almost 200 pips. That's 74.70. So we certainly could have 200 more pips to go on the downside there. And again, this euro across the board, euro yen coming in. Oh, baby. Had even a little pop on the North Korean situation. That was the sell, baby, right there. Certainly going to go for 112.50. Should we break through there, we really could be talking down in the 111.50 zone. I think this euro's busted. I looked at, again, dollar yen scares me a little bit with all the tension. Dollar yen could be very volatile just from a sense of, one, repatriation, because Japanese are scared, so they can bring money home, so dollar yen's going to go down. But then people have put assets in Japan, so maybe they're scared, they're going to take it home. Dollar yen going nowhere, I think. Euro Canada, again, the euro across the board, I love it. Down to the downside. Euro Canada looking very, very bad. I'd say we're looking at 137. But another one, breaking this whole uptrend channel line and looking very weak. On tap, we got U.S. numbers coming out. U.S. GDP, existing home sales. I think they're basically going to be pretty much in line, maybe to a little bit better. Existing home sales, I don't think are going to be good. And the minutes, though, today, 2 p.m. Eastern, could change everything. Maybe. Maybe Bernanke's going to, we're going to see more transparency out of the Fed. Maybe something's going to shock the market. But we're certainly going to see if there's any major dissension from the QE2. And once again, info at globalfxradio.com. And again, you can try my product for 1 week for free. For free, people. Only one per customer. And again, you can advertise on my site as well as do an affiliate arrangement where you get paid to send over subscribers. Andrew Spanton, Global Markets Radio, the only voice you'll ever need, baby.